Assalamu alaikum, excellencies, distinguished guests, ladies and gentlemen. Good morning, good afternoon, good evening, wherever you are. I'm Shakir Jalali. I have the honor to be your master of ceremony today. I welcome you to this important webinar, Advisory for Financial Institutions and Lines of Finance program for banks in Afghanistan, which is brought to you by the Islamic Corporation for the Development of Private Sector and Afghanistan Banks Association, ABA. Just a few housekeeping notes before we get started. This is a live webinar, and only the speakers and presenters will be able to turn on their mics and cameras. As you can see in this slide, the participants can submit their questions by clicking on the Q&A icon on Zoom. However, for the people accessing the webinar through YouTube, you can also submit your questions in the chat section you can see in this slide. The webinar consists of two parts. First, an opening ceremony with keynote addresses by Mr. Ahmed Khalid, Regional Head Asia, ICD, Mr. Najibullah Amiri, Executive Director, ABA, and Dr. Muhammad Yusuf Salim, Director General, Islamic Banking Department, the Afghanistan Bank, Central Bank of Afghanistan. And secondly, we will have well-informed technical sessions by Mr. Wajdi Hashna on knowledge sharing on spin-off and conversion of Islamic banks, roadmap, implementation, and success story. And Mr. Hakim Khandwala will have a presentation on financing alternatives for Islamic banking window and conventional banks by ICD. The main objective of the webinar is to support the Central Bank of Afghanistan initiatives on the transformation of Islamic finance industry in the country by showcasing the ICD's products and services that are made available for the Afghanistan banks and non-banks financial institutions. The webinar will also provide a platform for a constructive and fruitful dialogue between the various parties and address topics of common interest to identify concrete ways and effective solutions to support the development of Islamic finance in the country. We are thrilled to note the involvement of more participants who registered and attended in both Zoom and YouTube streaming room, including development institutions, funds, banks, investment in private equity companies, and key government and corporate sector representatives. To start off, I have the honor of introducing Mr. Ahmed Khalid, Regional Head Asia, ICD. Mr. Khalid has 19 years of experience in investment banking, business development, and developmental finance. Worked with Alliance Investment Bank of Malaysia and International Bank Malaysia Bahab. Prior to joining ICD, Mr. Ahmed Khalid, Your Excellency, the stage is yours.
Thank you very much, Brother Shakir, for the introduction. Thank you very much. Assalamualaikum and very good afternoon and evening to all of you, the participants here. On behalf of the Islamic Corporation for the Development of the Private Sector, ICD, is both an honor and privilege to join you at this important webinar. I would like to sincerely thank the organizers for granting me to say a few words, and also would like to congratulate ABA, the Association of Banks, as well as TICA Business Forum for their outstanding efforts in organizing this event. It is our hope, ICD hope, that this Islamic Finance webinar will strive and continue to be a much anticipated forum that all Afghanistan Islamic finance stakeholders look forward to attending in the future. So we hope that it's not a one-off event, but it can snowball into a very important forum. Yeah, and indeed we are pledged to continue supporting Central Bank of Afghanistan Association and all Islamic finance for its Islamic finance agenda for years to come. Honorable guests, brothers and sisters, as you know, Islamic finance emphasizes on transparency and fairness, and it has much to offer to any economy. You know, as alternative type of funding, Islamic finance and its characteristics lends well to facilitating and promoting sustainable development, such as risk-sharing modes of financing, which includes, of course, promoting assets and enterprise and the close link with the real economy. Positively also, as you know, Islamic finance is not only confined to Muslim majority countries. Beyond the traditional sphere, you know, it has found firm footings in new jurisdictions. In Asia, for example, Singapore is a major center. Hong Kong have issued sukuk. In Europe, for example, London have also issued sukuk. They make it easy for Islamic finance. And also recently in Sub-Saharan Africa, serving both sovereign and corporate clients on the sukuk issuance also. And throughout this period, Islamic finance institutions, as you know, have exhibited their aptitude and willingness to innovate its product and services, and thus increasing its relevance in the world economy. ICD was incepted, as you know, in 1999. We are 22 years old, and we have made significant inroads in advancing Islamic finance. As to share with you, we have also been involved in several initiatives on the establishment of Islamic banking windows in several countries in Africa, for example, in Mali, Senegal, Ivory Coast, for the Chorus Group, and in this region, in Asia region, we have done a few in Central Asia and in Indonesia, in Nusa Tenggara Barat. So conversion of conventional bank to fully Islamic bank. My colleagues, Brother Wajdi and Brother Hakim, will also give you more insights into these two initiatives, which is our line finance and also our advisory work. Brothers and sisters, our objectives for this webinar is multifold. One of it is for us to provide support to Afghanistan, a member state of ICD, and also, of course, a country with a sizable or majority Muslim population. Number two is we want to support the Central Bank of Afghanistan initiative on the transformation of the Islamic finance industry by showcasing ICD products and services that are available for the Afghanistan banks and banks financial institution. We also, as I mentioned earlier, want to provide a platform for constructive and dialogue between various parties and to address the topics of common interest and ways on how we can develop to further develop Islamic finance in the country. Lastly, we want to heighten awareness and understanding of Sharia system for the banking sector and iron out any issues that may arise. Also, we hope that via Islamic finance, this could be one of the gateway for Afghanistan to build stronger ties in trade and investment with other member countries of the ICD. Ladies and gentlemen, my brothers and sisters, we at ICD remain optimistic of all the good that Islamic finance can bring to the country. However, setting aside the enthusiasm, several multi-dimensional challenges need to be addressed by regulators and business community in order for Islamic finance to reach a new dimension and to flourish. We hope this webinar can also be the platform for us to engage and have constructive dialogue. Lastly, before I close, I would like to thank each of you for attending this webinar and bringing your expertise to this gathering. I know all the banks are here and also key senior regulators and representative of various governments have all the vision, the knowledge and the means and the experience to help shape the future of Islamic finance in the country. Lastly, I wish to thank Dr. Muhammad Salim, the Director General of the Islamic Finance at Central Bank, and of course, Association of Afghanistan Banking Association, Brother Najibullah, and all association members for their participation and insight. I wish to thank you and wish this webinar a great success. Thank you very much. I'm over to you, Brother Shakir.
Thank you very much, Your Excellency. Our second speaker is Mr. Najibullah Amiri, Executive Director, ABA. Mr. Amiri, the floor is yours, please. Mr. Amiri? Mr. Amiri?
نحمد ونصلي على رسول الكريم وعلى آله وأصحابه أجمعين. In the name of Allah, the merciful, the compassionate. Dear moderator, my voice is clear?
Please.
Excellencies, distinguished delegates, friends and colleagues from ICD, DAB, banks, Ministry of Finance, government entities, AMA, MFIs, MESFA, IMF, and World Bank. A very good afternoon, Sabahul Khair, and welcome to this important occasion. On behalf of ABA, it is a great honor for me to take part in today's inspiring occasion on transformation of the Islamic finance industry in Afghanistan. Today's webinar is jointly held by the in close collaboration of the Afghanistan Bank and with the support of Islamic Development Bank. Here, I would like to deliver my warm appreciation to ICD and ISDP Regional Hub Turkey Afghanistan team and promoting Islamic finance. A special thanks to Mr. Ahmad Khalid, Regional Head Asia. I would also like to extend my special gratitude to His Excellency Ajmal Ahmadi, DAB's Deputy Governor, and Dr. Yusuf Salim, Director General, Islamic Department, honorable CEOs of banks, and other chief and officials of banking sector for their support with ABA in today's seminar. I believe that our strong commitment and collaboration to arrange this webinar for the banking sector of Afghanistan will further accelerate the development of Islamic financial services in the country. Meanwhile, our commercial banks would welcome devotedly to get access to a vast resources, both intellectual and material benefits and experiences that can be derived from closely interacting with ICD and other IDB arms for growth and development. Unfortunately, when Afghanistan joined the IDB in 1976, our country was engaged into a prolonged war. As a result, Afghanistan, particularly the banking sector, has ever since remained deprived from IDB's cooperation and took initiatives to promote the banking sector in the country, and a number of banks came into existence. The growing banking sector started to self-organize by creation of a united body representing all banks to serve as it is mouthpiece in the dialogue with government entities. The Afghanistan Banks Association, ABA, was founded in 2004 as a non-political and independent association to meet the need of growing banking sector as a united body representing all banks. Today, we have 12 commercial banks operating in Afghanistan with 450 branch network. Out of 12 banks, we have one full-fledged Islamic bank and 6 Islamic banking windows. The Islamic banking industry is a nascent industry and still developing within Afghanistan. Its market share is about 12% of the total banking assets. The industry is also crossing through various challenges, including human capital, excess liquidity management issue for lack of enough Sharia compliant money market products, etc. These challenges can overcome with the support of both regional and international multilateral organizations such as IDB. I hope in today's session, the ICD experts can share their experiences along with the technical support that they are capable of providing to the Afghanistan Islamic banking sector. The Islamic banking and finance industry improvement through reliable and competitive alternative at global level.
I think Mr. Amiri is suffering from some technical issues. We will just go to our next speaker, Dr. Yusuf Salim. Dr. Yusuf Salim has a rich experience in various disciplines. He was a lecturer, he was Sharia board member with renowned international banks, Islamic banks. And currently, Dr. Muhammad Yusuf Salim is the Director General, Islamic Banking Department of the Central Bank, DAB, the Afghanistan Bank. Your Excellency, Dr. Saab, stage is yours, please. Dr. Saab, Salim. Okay, we have a 3 minutes ICD corporate video. We will just go through that video, and if we have our guests, we will turn back to our guests.
What does a business need to succeed? It needs strong leadership, clear goals, industry expertise, and financial stability. Together, these elements can contribute to your business's success, growth, prosperity, and longevity. With a heritage of helping businesses to thrive, ICD can support you. As part of the Islamic Development Bank Group, ICD provides access to finance. We've spent more than 20 years powering positive economic transformation across our member countries. Our vision is for sustained economic and social growth and prosperity across all of our member countries. And we support that vision by offering financial security, long-lasting partnership, deep expertise, and complete trust, so we can develop your projects and your expertise. Through our diverse range of Islamic finance products, such as line of finance, term and equity finance, your business will enjoy new opportunities. You can receive funding for existing and new projects, gain access to technical expertise and valuable training, and contribute meaningfully to your sustainable development goals by creating new jobs. Our support even extends beyond finance, with advisory services, debt capital market development, Sukuk issuance support and expert guidance. Plus, our online platform, The Bridge, opens new horizons to our network and connects financial institutions who are ready to do business beyond their borders. Whatever eligible sector you work in, we can help you build a strong foundation on which to grow, so you can move forward to achieve your ambitions.
Thank you. Now we are moving to the second part of. Now we are moving to the second part of the presentation, which will be delivered by Mr. Wajdi Hachana.
Thank you very much, Mr. Shakiri. Can I have the presentation, the slides, please? Yeah, thank you very much.
Please.
Thank you very much. Good afternoon or good morning, distinguished guest. It's a real pleasure for me today to present the advisory divisions and to share with you our knowledge and expertise in establishing and assisting financial institutions in establishing Islamic finance operations. And this is it's a great pleasure for us and for me to assist the country, our member country, in its transformation of the financial industry. Next, please. Yes, thank you. So I will just go. This is the agenda of my presentations or the content. So after a quick overview of ICD activities and the Islamic finance industry, I will share with you our expertise and our knowledge in this area, and with some success story that you have done previously. Next, please. So ICD is the private sector arm of the ITB group, and we have 55 member countries. Next, please. As you can see, we have 55 member countries across 4 continents. So we have in North Africa, or in Africa in general, in Middle East, in CS and Europe, and you have 1 member country in Caribbean region. Next, please. Of course, as I mentioned before, Afghanistan is one of the member countries, and it's always a pleasure to work with our member country to assist them in their effort to develop the countries. Next, please. So ICD has a strong differentiator that rely in many aspects. First of all, we have strong operational and financial growth. We benefit from our support of the IDB family. It's not only IDB, as you know, it's a group of entities that cover a wide range of activities, from insurance, development and training, trade finance, and of course, the development of the private sector. We have as well a strong partnership and affiliation with many other multilateral institutions that are always supporting us, and we are always supporting them in the effort of development of our member countries. Next, please. So this is, I will just share with you milestones. ICD, as I mentioned, since inception, we have a cumulative approval of almost 7 billion USD, where the disbursement reached almost 3.5 billion. Since inception, we have almost approved and financed more than 500 projects in our member countries. Next, please. As you can see, our strategy is mainly focused on financial institutions, yet we finance other activities, but our focus is the financial institutions, with almost 60% of total approval. The reason why financial institutions, because we think the financial institutions are the best channel to assist ICD effort in developing the private sector. So how we support the financial sector, basically with 3 kind of services. Of course, technical assistance or advisory. This is one. Line of finances, where my colleague Mr. Hakim will share with you the experience and this product, and or by investing directly in equities. Regional wise, we used to be very focused on MENA region, but we are moving now to be more balanced in terms of presence, while like MENA region only 30%, and you have, as you can see, a very balanced presence in all the region that we are covering. Next, please. Now I just want to share with you kind of global landscape of the Islamic finance industry. As you can see, the Islamic finance industry is very growing industry. At certain point of time, the annual growth was more than 20%. If you can see, between 2018 and 2019, the growth was almost 14%, despite all the crisis and all the events that you know. Unfortunately, the figures for 2020 are not here yet, but it can be a little bit of slowdown. But again, the industry is very growing, with an expectation to reach 3.6 trillion USD by 2024. Well, there is almost 600 financial institutions, Islamic financial institutions in the world. Of course, when you say Islamic finance total assets, we're not saying only banking. Islamic finance is a complete ecosystem where you have many other industry. So obviously, we have the Islamic banking, where they have almost 70% of the total assets. But then we have other activities, the capital market through sukuk, the Islamic funds, and the takaful, which is a new activity as well. Of course, we have other activities that reach that amount of 5% of the total assets, mainly private equity firms and the capital ventures and family business office. In terms of region, next please. In terms of region, as you can see, MENA region has the most or the biggest total asset, followed by usually Asia or Southeast Asia. And in terms of top asset by country, we can see like Iran, Saudi Arabia, and Malaysia. They have been on the top 3 for a long time, more than 5 to 6 years now, and they total asset or market share reach about 66%, almost 2/3 of the total asset in the world. That means that there is a real potential growth in all the other member countries. And historically, we have seen when a country starts really working on Islamic finance industry, the growth is there. The growth is very huge, and there is a huge potential. And you can see, I give example of Morocco, where like for the last 3 years, Morocco have been amongst the fast growing market in Islamic finance since I think 2017, when they established the Islamic banking law. So here the idea is just to share with you that the potential is there. Just we need to have like more pragmatic agenda and approach to establish Islamic finance operations. Next, please. Yeah, the benefit of Islamic finance is very known, but here Brother Ahmed has already shared few of them. But historically, you have seen that the Islamic finance can boost the SME growth because of the principal risk sharing that serve and promote more sustainable diversification of risk. And the risk sharing and asset-backed feature of Islamic finance has explained the potential of the industry that can provide a strong support to the SME which they don't have a guarantee, for example. But because of these asset-backed features, this has helped really the SME financing. The fact that Islamic finance is asset-backed means that it's fully collateralized, and therefore there is always a mitigation of risk, which of course the bankers appreciate. The Islamic finance, of course, promote financial stability because the Sharia prohibit the speculations, and you have seen this in 2008 and all the in the crisis, because the Islamic banks were not exposed to any speculated product. The Islamic finance or Islamic banking industry was not affected by the crisis, and because of the feature of this sharing, risk sharing features, the deposit, like we have always more profit, and the bank are acting in a very conservative manner in order to avoid any potential losses. And of course, the financial inclusion is one of our DNA, let's say, as development bank, but it's DNA of the Islamic finance. It's the DNA of Islamic finance through the promotion of the risk sharing contract, and because of the specific instrument that of which the distribution, such as zakat, sadaqat, and qadr hasan al-awqaf, that have been really playing a key role in the development of the country. And usually you have seen with our experience and project that many people that were out of the banking system, and because banks, they have been establishing the Islamic windows or full-fledged Islamic banks, people who they never had any banking account before, or they didn't get any financing before, they start dealing with the banks and they get introduced and the official banking system. Next, please. Now I'll share with you a high-level presentation of ICD advisory. ICD advisory, as I mentioned before, really establish and assist the bank or financial institution in their integration process into the Islamic finance, whether it's a full-fledged conventional banks, set up Islamic windows, or any other Islamic financial institutions. We provide, on the top of these services, we provide, of course, restructuring and enhancement advisory, where we assist the banks and assist them, and this is only dedicated to the Islamic financial institutions, to enhance their operational process, boost their financial resources, and diversify their product. We do assist, can assist as well the government and the regulatory in building development of policy or regulatory framework of Islamic finance. And of course, capacity building. This is like a key or a major services or technical assistance that we provide in order to fill the gap between the knowledge, the gap of knowledge in this industry in our member countries. Next, please. So this is, I give you a snapshot of kind of a similar project that you have been done previously. Our divisions is a new division compared to ICD. We have been established in 2012, so for almost 9 years, and you have more than 40 projects in almost all the continent. This allows us to build a good experience and understanding of each market, and to grasp the best practices that you can, of course, share it with others, with the potential with future partner. Next, please. This is kind of a project that you have been done. So we have Wifaq Bank, which will be a case study at the end of these presentations. We have Al-Akhdar banks and new banks. We have Trust Bank, which like this is the only Islamic banks in the Caribbean, in Suriname, and you have many other Islamic ones in Africa and CIS region. Next, please. Next, please. So you might ask yourself, or you ask us, why ICD, why advisory? First of all, we have in parallel a credential and experience in ICD that have been developed across diverse geographic region. As I mentioned before, you have 55 member countries, and IDB Group in general have 57. But this is allow us to have a good understanding of knowledge. Again, we are not a advisory consult firm or development institutions, and our main objective is really to develop and to grasp the better for our partner. Of course, we have a strong governmental and regulatory relationship as a multilateral development institutions, and when we can support and assist once required the financial institutions if they face any issue. And for example, we are doing this working closely with the banks and the central bank and the Ministry of Finance in Uzbekistan to establish or to assist this financial institution to establish the Islamic windows. Of course, the ICD assistance in the establishment of new banks or Islamic window will pave the way for the access to its Islamic finance product, and of course a wide network of investor and partner of ICD and the group in general. And this is again because we are not a consultant firm or a development bank, we can offer to you all of these services together. And finally, we can offer you opportunity to your staff for a reverse linkage or on-job training to one of our subsidiary or partner financial institutions, where your team can go there and grasp the knowledge that have been built by the other institutions. Next, please. Yes. Now we'll go, I think, to the main topic. Which is like, but before that, let me just clarify. I'm sure that most of you know the difference between Islamic banking and conventional bank. But here, just I want to highlight that Islamic banks or Islamic finance in general, the Sharia is in the heart or the backbone of this industry. And for us as well, or what we have been done, or what we do, we are putting the Sharia on the top of priority. Again, this is, I think, very, very important aspect. Of course, we have discussing about the interest-free, or like there is no interest in Islamic finance compared to conventional banking. There is no restriction of interest. Here in Islamic banking, Islamic finance really promote risk sharing between provider of capital and user of funds, while in conventional bank, there is no such things, and usually prefer the transfer of risk rather than sharing the risk. Of course, our Islamic bank are asset-backed, which is this is give a lot of facilities to the SME, and this is something is very important aspect. Of course, here there's some prohibition I would like to highlight in the Islamic banking, like alcohol, gambling, but usually those prohibition are the similar prohibition of any other multilateral international institutions like IFC or World Bank. They don't do the same financing. So here, like the prohibition, if they do exist, they are in the line with the normal practice in many countries. And of course, there is no uncertainty of speculation, which is prohibited, while we can see a lot of speculation in the conventional banking, which it led to the financial crisis in 2008 previously. Next, please. So now we just to share with you some thought and point on the transformation or the benefit of the transformation of your financial institution or the establishment of Islamic finance operations. First of all, I think there is high demand in this industry. In a country like Afghanistan, where the majority of the population are Muslim, this will allow the banks to capture the growing demand for such products and create, of course, for the institutions opportunity of growth and diversifications. And then this high demand today, but the potential of growth is always here. Because as I'm saying, this is we are in embryonic stage where the industry is still small in the country, and there is a huge potential that whoever will invest and start offering Islamic finance product will take an advantage of being among the first player to tap into the Islamic market products. Next, please. Yeah. So you might ask, you may have a question. I'm conventional banks or conventional financial institutions, and I want to establish Islamic finance operations to tap into this market. And you can say, how can I do it? Should I close my banks and start a new one? Should I convert? Actually, there is different way how to do it. The first one is the full conversion to fully fledged financial institution, mainly that you convert all your activity, all your asset and liability from conventional to Islamic, and the future activities will be only guided by Islamic finance principle and Sharia. This is one option that you have seen and have worked on. I will share with you one example on that. The second option is to set up Islamic subsidiary. So you keep your current activities as conventional banks, and you set up a new dedicated Islamic subsidiary. And you have worked on one project like this previously in Yemen, when a bank has established a dedicated Islamic subsidiary, Islamic banks in the country. And the last one is to set up Islamic window. So here, Islamic window, just I want to clarify, Islamic window means you keep your current activities, but you will create a new products, a new business line that respect some segregations. There is some requirement in terms of Sharia, in terms of practice, to ensure the customer and the investor that your activity in the Islamic windows is properly is fully Sharia compliant, and there is no commingling between the both activity, conventional and Islamic. And you have a good track record in that. I will share with you one of them later in the presentations. But those are the three options available that you can say honestly that can offer a good respect of Sharia principle, because there is other options but from our perspective, they don't comply with the Sharia principles or the Islamic finance principle in general. Next, please. So here, the transformation matrix. As I mentioned before, we have many projects that have been developed, and you have developed this matrix based on our previous experience, and you have classified this requirement, or let's say in a quadrant, 4 high-level quadrant. The first one is more about strategic, and then you have regulatory, the operational, and the governance. The strategic quadrant is basically to have a good strategy, because if you take the decision to implement this industry, you need, of course, to have the approval, or in principle approval of your from your board for the transformation, let's say, or for any, or even it's not transformation, to establish Islamic window, or even to establish a dedicated subsidiary. You need to assess the opportunity, which I'm sure there is a lot of opportunity in Afghanistan. I don't have any doubt on it. And you have seen other countries similar to Afghanistan. When the banks, they initiated the Islamic finance industry, the growth and the amount of deposit and resources collected was very huge. Of course, you need to prepare a transformation roadmap to get approval from your board, and then finally you have detailed value propositions. And then you have, I think, the second quadrant, which is very important as well, and it taken into consideration as financial institutions, is the regulatory framework and regulatory requirement, either to have like central bank approval. It's in principle as final approval. It depends on the country. It's different from country to country. But what we need to have to keep in mind, and I'm sure that you know that you need to have the central bank approval, or at least an objection to launch the Islamic finance activities. The third quadrant, let's say the governance quadrant, which is mainly in terms of implementations, to establish a kind of project management team from the client side and from ICD when you do the project, to have like an oversight committee amongst the board to follow up and to monitor the implementation, because this is very strategic. There is many decisions to be taken during the implementations, and we need like a high-level authority that can approve it in order to implement the project in proper manner and on timely manner, let me say. And of course, you need to identify your Sharia or advisory board that can assist the banks during the implementations of the Islamic finance operations. And finally, if it's like a full-fledged conversion, you may need the AGM approval, general meeting approval for the final conversion or transformations. And the fourth quadrant is the operational quadrant, when you have to establish to build all your operations in terms of accounting, your risk management framework, your IT strategy and IT system, the guide and hire the required staff for this transformation, for these new activities, as per se. Next slide, please. Here, this is the transformation roadmap at the glance and steps, where what I can say here, basically, it will take you, according to our experience, a transformation of commercial banks to Islamic banks, or the establishment of new Islamic financial institutions, takes usually between 12 and 18 months in general. It can be more or less, but this is the normal, let's say, duration for such project. Of course, there is many criteria that can affect or can change the durations, but this is average. If it's Islamic window, it's much less than that. It's usually between 6 and 9 months when it comes to Islamic window, and the steps are slightly different as well. But let's focus on the transformation, establishing of new banks. So here you can see the 4 quadrants I have mentioned before, and there are the steps, different steps So I think it's clear, and we will share with you the steps later. But here to give you an idea that transformation of a bank's, it's a real project. It's not very complicated, but again, you need to have expertise and experience. Because as any other project, big project, there is many criteria or risk that need to be mitigated. Then many aspects that need to take into considerations to avoid any problem or any challenge, to reduce the challenges that you will face during the implementation of your project. Next, please. And here where come ICD approach and ICD expertise in establishing or in assisting in the financial institutions in similar project. We have a turnkey comprehensive solutions to guide on the different stage on different stage of the value chain toward the successful conversion or implementation of Islamic window or full-fledged Islamic banks. We have an 8-pillar approach that we have been establishing, and this has been developed with our experience, taking into consideration all the challenges that we have been facing in other previous projects. As I mentioned before, we have more than 40 projects in different countries, and we have been learning from each project, from each challenge that you have been facing, and you have been developing this approach. Our approach is not guided by commercial purposes. As I mentioned, we're a consultant firm where we are developing institutions, and this approach, what we think this is the best, the minimum that we can provide to any financial institutions in order to successfully assist them in establishing or implementing their Islamic finance operation or the transformation of their banks. This is a very critical approach, and I will share with you a few details on each pillar, what it's covering. So we have the Sharia compliant financial products, and here where ICD will assist you in structuring a dedicated Sharia compliant products that can fit your market needs, your customer needs, and of course your environment. And for this one, you not only structure and give you like a structure of the product, but we will give you the process and procedure, what you call product brief with detailed commercial purposes, all the feature. In relation with the legal support, we'll provide you a legal documentation for that. That of course will work with you hand in hand to make it fit, to make it compliant with your legal environment. But we provide you a full-fledged set of documentation for each product that can easily allow you to implement the products without facing any difficulties during the implementations. On the top of the Sharia compliant financial product, we'll provide you as well the Sharia, let's say, will assist you in implementing the relevant function of Sharia compliance or Sharia governance. So we provide you with a proper Sharia governance framework. We'll assist you in establishing your Sharia committee, Sharia board if required. And if you need to be, let's say, you don't have a Sharia expert, we can guide you and introduce you to some Sharia scholars in that field, in the Islamic banking field. They can assist you and they can build with you your Sharia committee. And you have been this many times, especially in country where this expertise is not there. And we, alhamdulillah, successfully implemented a lot of Sharia committee in this country with the help of Allah and with our networks. The human resource support, it's kind of capacity building, but not only that. Here, we will guide you in many aspects. It depends on the bank's requirement, but at least the minimum that we can provide here is to provide like kind of training, a theoretical practical training for your staff in order to acquire the expertise and the knowledge that is required for this industry. And here, this one training, what I said, practical and theoretical training, it can be done on your premises. And then you have the other training that I have mentioned before in previous slide, where it's like kind of on-job training. When we allow you, we organize with you like training missions to one of our affiliate investee or partner, I mean Islamic Bank partner, where your staff will have like practical, really practical knowledge, and can see really how the other financial institution, other market, they're practicing and they're implementing the Islamic finance. And this is something is really appreciated by the top management usually, because top management will go for maybe not the full period of the training, but at least for 1 or 2 days to discuss with the management of the other financial institutions. And this will even allow future or more collaborations with other financial institutions, other markets. The fourth pillar, which is critical for us, and this is not, we have been developing this one because I think we have maybe, I want to say the sole, I mean, there is few that have this expertise between Sharia and IT, and they can assist in this field. So the IT, as you know, as a bank, this is the backbone of any financial institutions. And the bank, they cannot work properly if they don't have a good core banking system that can fits and then support the Sharia products. I think I'm sure that you know that the Islamic products are more complicated, the structure are more different, and there is a wide range of structure than conventional finance. Conventional finance, let me say, it's like take your money and give back the money with interest. Islamic finance, giving the structure, they have many structure, asset-based structure, risk-sharing structure, fee structure that need to be supported by any core banking system, especially when it comes to the deposit side, where it's much more complicated than conventional. And usually this aspect is supported by the IT. And here where ICT expertise come in the project to assist you, first of all, to assess your current system, to see whether it's possible or not to use your system for Sharia compliant product, and whether or not it's not possible. And then we assist you in the the whole selection of any IT system, from the RFP till the final negotiation with the vendors, and we'll review the legal agreement with the vendors and everything we are doing. We can do it, and then after securing the system, the solutions, we assist you in the implementation of the core banking system, where we will be monitoring the implementation. We'll bring our expertise in the project management in this area, and we will monitor and follow up to make sure that everything is as per plan, and the final services, final solution is fully Sharia compliant as per the RFP and as per the requirement. Then we build the accounting support, which is important, as you know, for financial institution to have the figures, and financial are very important. And as I mentioned before, we help you in 2 areas. First of all, to select the best accounting policy in your case for these new activities, and we help you in establishing all the like accounting entries, all the reporting required as per the of course central bank regulations, and as per the international standard that you usually follow. And usually you follow 2 main standards in that area. The first one is AUFI standards, which I think the common one, and then we can use IFSB standard, which provide a lot of support and information that can be followed for best practices. The 6th pillar is the treasury. As I mentioned, you will grasp like a lot of resources, usually, especially when you are the leader in the market, and all these resources need to be used, and you have a lot of treasury, and will support you in adopting or guiding a Sharia compliant treasury policy. Will guide you as well, and the Sharia policy encompass everything, encompass like it's a guideline in terms of risk management for treasury. We structure with you product that can you be used for your treasury divisions, and so on. The 7th pillar is the risk management framework. I'm sure that as a banker you are well equipped with risk management, because banking is at the end is risk management activities, where you need to manage your risk. However, given the structure of the Islamic finance, given the differentiation between the Islamic banking product and the conventional product, there is many other risks that needs to be taken into considerations. And here, when we bring our expertise to help you to mitigate all of this risk, by preparing a bespoke risk management framework based on international best practices. And here, when you say best practices, I refer to IFSB, International Financial Standard Board, based in Malaysia, and of course the central bank guidelines in the countries. And finally, the marketing and communication aspect. And here it's very important when you change your activity, or even when you add new activities, how to communicate, the best practice, the best strategy to communicate. It's very important. It's critical, because communication is the key for the success of the project. You can have the best product, you can have the best services, you can have the best process, the most efficient one, but if your communication is not as good as your process or your product, your project will not be a successful one. And here when we bring our marketing team with us on board, and they bring all their expertise they have to assist you in developing a marketing communication plan for the new activities, and will support you in your effort, in your communication effort, and in the official launching of the new Islamic window or bank, of course. So here, this is, as I mentioned, this approach is not based on commercial for us. It's really based on what you think is needed for successful implementation for this project. And this have been based and built project after project with all the projects that we have, we have more than 40 projects that have been successfully achieved and implemented in our member countries. Next, please. Here I want to share with one case study. It's Wifaq Bank. So Wifaq Bank, I think this is, for me, it's one of the best case study. Wifaq Bank, it was not a bank before. Even it was a conventional leasing company. That we worked with them, collaborate with them in many aspects. The first one, that we transformed this leasing company into full-fledged Islamic banks. So as you know, this is like kind of a very challenging project, because it has many aspects. The first one, yes, it's technical services to assist them in this transformation phase. It's a major transformation. And we assist them as well in raising new funds. So the company as leasing has almost a capital of, let's say, 10 million USD at that time. And we transformed this 10 million to USD to almost 80 million USD. We helped them in raising funds for the new activities. This is the first services. The second one was to transform this leasing company to full-fledged banks. And we did it in 2 steps. The first steps was to transform the leasing company to Ijara company, and then from Ijara to full-fledged Islamic banks. And you can say, why these double-step transformations? Actually, this double-step transformation has a rationale behind it, because you didn't want the activity of the institution to stop early in the project implementations. And the easiest way was to transform this leasing, this Ijara to leasing, to allow the bank to generate revenue while transforming the financial institution, building a new product, new services, and transforming it from Ijara to banks. So this was really pragmatic in order to avoid any loss of business of activity of the financial institutions. And this was a success. It took us almost in all the projects, from fundraising to take the central bank agreement, and so maybe 2 years. But for project implementations, which is covering the 8 pillars that have been shown to you, described to you, it took us 12 months approximately. It was one of the, let's say, best experience that we had. And by the way, ICD is investing in these financial institutions, is one of the key investor shareholders in these financial institutions after the transformation, of course. And this financial institution is the unique financial institution, let me say, is the unique Islamic banks listed in the Tunisian capital market. Next, please. So Trust Bank Amana, or Trust Bank, and now it's become Trust Bank Amana, is a conventional bank in the Caribbean, in Suriname. Suriname is a small country in Caribbean island with almost 30% Muslim populations. And we assess the need, and the banks has identified the need for Islamic products to serve the Muslim community in the country. And we assisted the banks in the transformation. So in transformation from conventional banks to Islamic banks. So here we assist them, of course, in the 8 pillars that I mentioned before, in terms of structuring new product, the IT implementation, the treasury, and so. But we assist them as well in the full conversion of the asset from conventional to Islamic, and the liability as well from conventional to the Islamic. So here we assist them in the implementation of the new product and in the conversion of their balance sheet, which was not really the case in the previous project with Bank, because it's kind of a new activity. But here we assist them with techniques that we have built to transform, to convert this conventional balance sheet to Islamic balance sheet. Of course, this has been approved by Sharia committee, their Sharia committee, and per our Sharia advisor in ICD. Next, please. This is another case study, which another way to establish Islamic finance operations through Islamic windows. Coris Bank is a group of bank in West Africa, is one of the major banking group in West Africa, and has different affiliates. We start with them with one project, was Coris Bank in Burkina Faso, the major bank there. So we identified with them the product. We assist them in establishing this new activity within the banks with all the required segregations of funds, of activities as per the Sharia requirement. We assist them in building their Sharia knowledge. So it may be not the case in Afghanistan, but in this country, for example, having knowledge in Islamic banking, it's not easy. It's very difficult to find local people, and we help them. We help them in structuring with many training. They build the capabilities of their team, and we help them in establishing their Sharia governance by assisting them to hire and appoint international Sharia board members and local Sharia local Sharia board members. The reason why we have international Sharia board, for example, in this case, and local Sharia board members, is the transfer of knowledge. As I mentioned, we are developing institutions, and the transfer of knowledge between our member countries is very crucial for us. And here the idea is that this experienced Sharia board member will transfer over time all his knowledge to the new local Sharia board members. And this is what happened before. And alhamdulillah, this bank is very successful in the country. And even we assist them not in this project, but we assist them in 7 other projects. So basically, we assisted them in all their affiliates they have in West Africa. They have 8 banks in Africa, worked with them in 8 banks. And of course, we always provide our 8 pillars, let's say, because this is what we think that is crucial. For these banks, we didn't provide treasury and risk, because after this project, basically, we identified that there is a real need to assist the banks in building the Islamic treasury, let's say, and to assist the banks in building a bespoke risk management framework. As I mentioned, we are building our approach, and after each challenge, after each lesson learned from each project that you have done, in order to allow for the new partner to benefit from all this knowledge that you have been grasping over all the projects that we have been implementing in many countries. Next, please. This is the last one. Thank you very much for Your Excellency. And you have any question, I can answer. It will be my pleasure to answer them later in the Q&A session.
Thank you, Mr. Wajdi, for your very informative presentation. Luckily, Mr. Yusuf Salim, he's on board. He will have his own remarks. We will just give him a few minutes. After that, we will move to the next presentation. Mr. Salim, Your Excellency, the floor is with you. Please unmute. Dr. Salim, please unmute.
Bismillahirrahmanirrahim. My apologies due to poor connection. I could not attend the opening ceremony. Alhamdulillah, that problem is solved. I will not take Mr. Chairman, Mr. Amiri, and other colleagues. Thanks for this opportunity that you have given me to talk here for a few minutes. I will not take much of your time. I'll be brief. Most of the points are mentioned by my colleague, Mr. Amiri. I just want to briefly talk about the Islamic banking sector. Despite the current situation here, and despite the COVID-19 pandemic, the sector is admirably doing well. On the total deposit side, we have 37.7 billion Afghanis. And on the asset side, we have almost 45 billion Afghanis, which is quite encouraging. We have altogether in the sector one full-fledged bank and 6 Islamic banking windows. And the sector has employed a total of 1,052 employees. And they have both deposit and financing products, which are based on Mudaraba and also Qard on the deposit side. And on the asset side, they have Sharaka, Mutanaqisa, Murabaha. And we look forward to have more financing products like lease and both operational and financial lease, and the increase in the number of the other products. But as all of you are aware, the window is a transitional period. It is not meant to stay here forever. So we are looking to opportunities to upgrade. We want to see the windows upgraded to the full-fledged Islamic bank, because although it's a good positive first step, but there are some associated problems with the windows. There are issues with the segregation of fund, segregation of counters, and this may diminish people's trust and confidence in the sector. So therefore, we look at the windows as a transitional period, and we hope at least in the next 2 to 3 years, we'll have at least 2 windows that will be upgraded to full-fledged, and we hope the ICD can assist us with technical knowledge and with expertise. I'm sure there's a wealth of expertise and knowledge in the ICD, and I hope they can assist us in this process. Beside this, we are also looking that the Islamic financial sector should play a meaningful role in funding the SMEs, the corporate and government-linked sector, and as well as the important housing sector. Housing is one of the basic necessities, and at the same time, it has the potential to move the economic wheel in Afghanistan. That sector is very important and needs a lot of attention from the Islamic banking sector. We also hope that the sector will diversify its deposit and financing products and comply with the Sharia principles so that we can build a reputation for the sector. We also hope that they will strengthen the corporate governance, tighten the internal control, and avoid reputational risk. Mr. Chairman, of course, we have had a lot of problems, particularly with the liquidity management. I think our banks are, and the windows are to a great extent over liquid, and we should have come up with the liquidity management tools. In this regard, His Excellency, our acting governor, Ajmal Ahmadi, has taken the initiative to introduce Sharia-compliant liquidity tool based on Wadia that is being in operation for the last almost 1.5 months. And it has been welcomed by the sector, by the industry. And we hope the ICD can also assist us to come up with more liquidity management tools. And of course, to develop, we hope in the long run, to develop an Islamic interbank money market that will greatly help us in the sector, in the industry, to manage their liquidity tools. We are also working on the Sukuk front together with the Ministry of Finance. We plan to issue our first sovereign Sukuk, inshallah, in early 2022. And I hope with Sukuk issuance, there will be great development, and the Islamic banking sector can actively participate, and through that participation can help recover the national economy, and at the same time finance the mega infrastructure projects. Besides this, we also hope and are determined that the Islamic banking sector must play a greater role in financial inclusion. The Afghan peoples are Muslims, and they are willing to bring their money into the Islamic banking sector. We have to work on the trust, on the financial inclusion side, so that we can use that money that is so far not used by the banks, to channel that, fund that money into financing our mega projects and also the SME sector. With this, I also just want to add one more point, that the IDB, the Islamic Development Bank, can also help Afghanistan in social finance sector, that is in the Waqf development. The IDB has a wealth of knowledge and experience, and through its Islamic Corporation for the Development of the Private Sector, and through its other branches that are meant specifically for the Waqf sector, that we hope, like the Awqaf Properties Investment Fund, I hope that can also participate in the development of the Waqf sector in Afghanistan. Finally, I thank the Development Bank, the Islamic Corporation Development, for organizing this very useful and meaningful program, and I hope our Islamic banking sector can capitalize on the expertise of the ICD to upgrade themselves to full-fledged Islamic banks. And also, we hope that our conventional banks will establish Islamic banking windows, and we hope we can help and assist in this direction. Once again, thanks very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Dr. Saab. Now we will move forward to our second presentation. And I'm going to introduce Mr. Hakim for the second presentation. Mr. Hakim, please.
Thank you very much, Mr. Shakir, for the introduction. Assalamu alaikum and good afternoon, everyone. It gives me great pleasure to be part of this webinar, and I'd like to thank you very much for attending. As introduced, my name is Hakim. I work in the FI Financing and Guarantees Department here at ISCD. Today, I'll be giving you a quick overview of our line of finance product. Next slide, please. Okay, so this is just the agenda of what I'll take you through today. So first, I'll take you through the concept of lines of finance. Then I'll take you through our Wakala structure. I'll then take you through our Murabaha structure. I'll then take you through the disbursement process via a commodity Murabaha. And then finally, just to conclude, I'll give you a quick overview of our current portfolio. Next slide, please. So this is just the concept of the line of finance. So what's the line of finance product? Essentially, ICD uses the line of finance product to extend financing to financial institutions in our member states in order to improve the access of private sector enterprises to medium-term financing, as well as strengthening the balance sheet position of beneficiary banks. So what's the objective of the LOF product? Well, it's to promote Islamic finance. It's to partner with financial institutions and benefit from their local presence and expertise. And it's also to improve access to private sector enterprises to medium-term financing. So in terms of eligible financial institutions, what are we looking for here? So we're looking for financial institutions that are essentially registered, authorized, and licensed to operate in our member countries. And they also have to satisfy a quantitative and qualitative criteria, more of which I'll go through later. In terms of end beneficiaries, we're hoping to reach private sector enterprises in eligible sectors that have an impact on local development. And they also have to be companies that are majority owned by investors from our member countries. In terms of the expected developmental impact, given that we're a developmental institution, we hope that this LOF product will help foster economic growth, alleviate poverty, create jobs, as well as strengthen financial systems and promote Islamic finance. Next slide, please. Next slide, please. Okay. So this is just a quick snapshot of our eligibility criteria, just to give you a general understanding of what we do. So basically, ICD uses the LOF product to finance eligible projects which are sponsored by eligible project companies. So what's an eligible project company? Well, it's basically a company that's owned by investors from our member states. It's a private sector enterprise, so essentially share participation by governments should not exceed 49%. Of the voting stock. And obviously, given that we're a Sharia compliant organization, the main business of the company should not violate the principles of Sharia. In terms of eligible project, again, given that we're Sharia compliant, it should be a project that's in conformity with the principles of Sharia. It's also a project that should result in substantial developmental impact, as well as minimal negative environmental impact. Given that we are a Islamic financial institution, the LOF product is used to finance the procurement of tangible assets. So these are things like fixed assets, such as equipment, machinery, and buildings, as well as raw material, with the exception of precious metals. Next slide, please. So here's just our a quick overview of our quantitative and qualitative assessment criteria. So this is what we take into consideration when we're assessing a financial institution. So what do we look for from a qualitative perspective? Well, we look at the macroeconomic environment as well as the regulatory framework. We look at the corporate governance structure. So we look at the board composition and the presence of the relevant committees. We look at the shareholder profile. We also look at the expertise and integrity of the management team. Particularly important here is the ethical behavior of the management team. We also look at management quality. So we look at things like adherence to banking regulations, good risk management practices, etc. We look at the innovation and competitiveness of the underlying products that the financial institution has, as well as the quality of the services that they provide to their customers. We look at the IT infrastructure, the role of the financial institution and its financial system. And most importantly, we look for a solid track record of private sector financing. From a quantitative front, what do we look for? Well, we look at the financial performance of the bank. We look at things such as historical growth, liquidity and profitability. We look at the capital adequacy as well as the capital structure, just to ensure that the financial institution has the sufficient buffers. We look at asset quality, the strength of provisioning. We look at funding strategy. We also have our own internal scoring or ranking system, as well as our own internal policies and procedures, such as our own exposure limits. Next slide, please. So here are some of our major terms and conditions. So the line of finance is normally advanced in US dollars, although euros can be offered. The mode of financing is Sharia compliant. Predominantly, we use the Wakalah structure and or the Murabaha structure. The size of the financing really depends on the risk profile of the financial institution, as well as ICD's own exposure limits. The pricing is determined individually based on the credit assessment of the underlying financial institution, as well as market dynamics and the developmental or potential developmental impact of the funding. We offer medium-term financing, so our the duration of the financing is normally 3 to 5 years. The utilization period, that's basically the period that begins from the effectiveness date. It's essentially the amount of time that the financial institution has to fully draw down the line and fund eligible projects. This is usually for a 5-year facility between 6 to 9 months. Eligible sectors, we're pretty broad here. It's all sectors apart from defense, recreation, and any non-Sharia activities. The single project limit is USD 10 million. Furthermore, there are penalties for any late payments, and these are donated to charity. Next slide, please. So essentially, under the line of finance product, we offer 2 schemes. So the first scheme is the direct murabaha between ICD and the underlying SME client. This is also referred to as the agency or Wakalah structure. This is mainly suited for conventional financial institutions and any financial institution that cannot trade in physical assets. For all intents and purposes, ICD basically buys the asset and then sells it directly to the SME client on a murabaha basis. The financial institution under this arrangement acts as ICD's agent. It thus sources and identifies underlying SME clients on our behalf and then enters into the necessary documentation on our behalf, such as the financing agreement and the purchase agreement for the purchase of assets in relation to the underlying eligible project. The financial institution also provides ICD with a guarantee, guaranteeing the repayments of the underlying SME clients. So for all intents and purposes, the credit risk under this structure is with the financial institution. We also offer a double-step murabaha. This is more suited for Islamic banks and any financial institution that can trade assets, such as leasing companies. In this particular situation, ICD buys the asset and then sells it directly to the financial institution. The financial institution will then own the asset and sell it or lease it to the underlying SME client on its own terms. Next slide, please. So now I'll just take you through the Wakalah structure in a bit more detail. So basically, in relation to this structure, ICD and the financial institution enter into a line of financing agreement. This consists of an agency agreement whereby the financial institution identifies, selects, and appraises SME clients. It also authorizes the financial institution to sign requisite documentation on our behalf, such as the underlying financing agreement with the underlying SME client, as well as the supplier agreement with the supplier of assets. There's also an escrow account agreement here. This is an account under ICD's name, held mainly with the partner financial institution. All payments made by the client in relation to the LOF facility are then paid into this escrow account. So I'll just take you through the mechanisms of how the Wakalah structure works. So we sign a Wakalah agreement with the financial institution. The financial institution then selects and appraises an eligible SME client that it believes fulfills our eligibility criteria and will benefit from ICD's financing. The financial institution will then sign an underlying financing agreement with the SME client on our behalf, and it will also sign a supplier agreement with an underlying supplier for the procurement of assets. Once these two documentations are in place, the financial institution will send ICD a disbursement request together with some ancillary documents, such as a letter of guarantee, guaranteeing all repayments from the underlying SME client. Once ICD is satisfied with the disbursement request, it will transfer the funds to the supplier of assets. This can either be done directly or via a bank account held at the financial institution. Once the supplier receives the funds, they transfer the asset to the underlying SME client, who takes delivery of the assets on our behalf. Once the procurement of assets has been completed, the client submits a request to purchase to the financial institution. After getting clearance of the repayment schedule from ICD, the financial institution then submits its acceptance to sell. In that fashion, the Murabaha transaction between ICD and the SME client is concluded. Steps 2 to 4 are essentially repeated until the entire facility amount is utilized. Next slide, please. So here's just a flow diagram of the structure, just for ease of comprehension. So the first step here is that ICD and the financial institution sign a Wakalah agreement. The financial institution then signs a Murabaha agreement with the underlying SME client on ICD's behalf. That's step number 2 here. The SME client then, as a sub-agent of ICD, will sign a supplier agreement with the supplier of assets. That's step number 3 here. The financial institution, depending on its credit assessment of the underlying SME client, may take collateral on ICD's behalf. Once the underlying financing agreement and the supplier agreement are in place, the financial institution sends ICD a disbursement request. This is step number 4 here, together with ancillary documents such as the letter of guarantee. Once ICD is satisfied with the disbursement request, it will then forward the funds to the supplier. This can be done directly, that's step number 6 here, or via a special bank account held with the financial institution. That's steps number 5 and 6. Once the supplier receives the funds, they deliver the asset to the SME client. The SME client then provides its offer to purchase. ICD via the financial institution then provides its acceptance to sell. That concludes the Murabaha agreement, and so for all intents and purposes, the SME client is now the owner of the underlying assets. Repayments are made in accordance with a repayment schedule. All repayments from the SME client are deposited in an escrow account. That's step number 8 here. After taking its commission, the remainder is remitted to ICD as per the repayment schedule. That's step number 9 here. Next slide, please. Okay, so what's the role of the financial institution under this particular arrangement? Well, it's to identify and appraise eligible projects for our financing. It's to prepare all legal documentation, such as the underlying financing agreement and the supply agreement. It's to oversee the procurement process, guarantee full repayment by the underlying SME client to ICD. follow up on project implementation, monitor and reporting, and it's also responsible for ensuring timely collection of installments from the SME client. Next slide, please. So what's the role of the SME client? Well, this is defined in the Murabaha agreement, but usually the buyer should procure and take delivery of the assets on ICD's behalf, commit to purchase the assets from ICD, i.e. a promise to buy, commit to the predefined repayment terms, and transfer the installments into ICD's escrow account in a timely fashion. Next slide, please. So in terms of disbursements, these are activated once all CPs have been fulfilled and the underlying financing agreement has been declared effective. Disbursements are normally done in dollars, and the ICD's markup is basically accrued from the date the funds are dispersed to the supplier. Now there is the financial institution has 5 days to pay the supplier. Now, there is a late payment charge for any delay in payment to the supplier, and this is donated to charity. Next slide, please. So this is just a flow chart of the disbursement mechanism, just to give you, just for ease of comprehension. So basically, the financial institution and the underlying SME client enter into a financing agreement on ICD's behalf. The SME client will then enter into a supply agreement with a supplier for the procurement of assets as ICD's sub-agent. This is step number 2. Once both of these documents are in place, the financial institution will send ICD a disbursement request together with ancillary documents such as the underlying financing agreement between the financial institution and the underlying SME client, as well as a letter of guarantee and the details of delivery of the underlying assets. Once ICD is satisfied with the disbursement request, it will transfer the funds to the supplier. This can either be directly, step number 4, or via a special bank account held with the financial institution. Once the supplier receives the funds, they'll deliver the asset to the SME client, who will procure the asset on ICD's behalf. Next slide, please. And this is a flowchart of the repayment process. So then the financial institution, once the Murabaha has been concluded and there's an offer to purchase and an acceptance to sell, ICD will verify the repayment schedule. The repayment schedule will then be issued to the underlying SME client. The SME client will make payments to an escrow account in line with the repayment schedule. After deducting its incentive, the remainder of the money in the escrow account will be remitted to ICD in line with the repayment schedule agreed between the financial institution and ICD. Next slide, please. So that's the Wakalah structure that's mainly used for conventional financial institution. We also have a Murabaha structure. This is mainly used for financial institutions and institutions that can trade in assets such as leasing companies. So how does this one work? Well, essentially, ICD and the financial institution enter into a line of financing agreement. This consists of a Murabaha facility agreement, as well as an agency agreement authorizing the financial institution to appraise eligible SME projects and sign documentation on ICD's behalf, such as the supply agreement. So in terms of mechanism, how it works, once the financial institution has selected an eligible SME client, which it believes will benefit from ICD's funding, it drafts a financing agreement between the SME client and the financial institution, as well as drafting a supply agreement between a supplier for the procurement of assets. Once both of these documents have been drafted and are in place, the financial institution sends ICD a request to purchase and a promise to buy. ICD will then accept this promise. Following on from that, the underlying financing agreement between the FI and the underlying SME client are executed, as well as the supply agreement with the supplier. Once both of these documentations have been executed, the financial institution will send ICD a disbursement request. Okay. If ICD is satisfied with the disbursement request, it will then transfer the funds to the financial institution. The financial institution will then pay the supplier. and the supplier will deliver the asset to the SME client on ICD's behalf. Once the procurement process has been completed, i.e. the SME client has possession of the underlying asset, the financial institution will send ICD a request to purchase. ICD will then respond with its acceptance to sell, which will then essentially conclude the Murabaha transaction. The financial institution, as the owner of the asset, is then allowed to sell or lease the underlying asset to the eligible project company under mutually agreed terms and conditions. Steps 2 to 5 are repeated until the entire facility amount is utilized. So under the Wakala structure, the ICD sells the asset to the underlying SME client, and the bank acts as its agent. Under this particular structure, ICD sells the asset directly to the financial institution. Next slide, please. So here's a flow chart of the mechanisms of the Murabaha transaction. So the first step is ICD signs an agency and Murabaha agreement with the financial institution. The financial institution then identifies and selects an eligible SME client, which the financial institution believes fulfills ICD's eligibility criteria and will benefit from ICD's funding. It then drafts a financing agreement between itself and the underlying SME client, as well as a supply agreement between a supplier for the supply of assets. Once both of these documents have been drafted, the financial institution, under step number 4, will send ICD a request to purchase and a promise to buy. ICD will accept this promise. The financial institution will then execute the financing agreement as well as the supply agreement. Once both of these documents have been executed, the financial institution will send ICD a disbursement request. ICD will then disperse the funds to the financial institution, who will then pay the supplier. The supplier will then deliver the assets to the SME client, who will take delivery on ICD's behalf. Once this procurement process has been completed, the financial institution will send ICD an offer to purchase. ICD will then accept this offer via an acceptance to sell and accompany the acceptance to sell with a repayment schedule. Once this has been done, the Murabaha transaction is concluded, and steps 2 to 8 are repeated until the full facility amount has been exhausted. Next slide, please. So this is the repayment process under the Murabaha transaction. So basically, ICD sends the financial institution a repayment schedule, and the financial institution makes periodic repayments based on that repayment schedule. Given ICD has sold the underlying asset to the financial institution, terms between the financial institution and the SME client are independent from the terms that have been negotiated between ICD and the financial institution. Next slide, please. So now I'll just quickly take you through the disbursement process via a commodity Murabaha. So in terms of disbursement of the LOF facility, we basically have 2 methods of disbursement. Now we can either disperse the funds gradually on a project-by-project basis during the utilization period, or we can attach a Murabaha transaction to one of the above 2 structures that I just described and disperse the facility in one single disbursement at the beginning as soon as the agreements have been declared effective. Next slide, please. So what's a commodity Murabaha? So a commodity Murabaha is essentially an Islamic product that's used for interbank placements. It's essentially structured based on the trade of non-precious metals through the London Metal Exchange. Subject to prevailing regulations, ICD can use the CMA as a tool for upfront disbursement of the whole facility amount. The CMA is basically a structured product. It carries the same pricing as the underlying LOF agreement. The duration of the CMA normally covers the utilization period of the line. Essentially, for all intents and purposes, our Treasury Department can arrange the CMA with minimal operational engagement from the beneficiary financial institution. It can be used under both LOF schemes, And it's used basically to disperse the whole amount upfront to the beneficiary financial institution using one single commodity murabaha agreement. The facility amount is then reallocated to eligible projects during the duration of the commodity murabaha, which, as stated, normally runs concurrently with the utilization period of the line of financing agreement. Next slide, please. Okay, so here's how it works. So ICD and the financial institution enter into an LOF agreement. To facilitate the disbursement, the financial institution and ICD also enter into a commodity murabaha agreement. The tenor of the commodity murabaha will run concurrently with the utilization period. During the tenor of the CMA and before the maturity, the financial institution identifies an eligible SME client which it believes will benefit from ICD's funding. It thus requests ICD for a partial and early repayment of the CMA. ICD then subsequently agrees to this early repayment, and then the financial institution deposits the proceeds of the early repayment into an operational account under ICD's name. ICD then authorizes the financial institution to utilize the proceeds within the operational account to fund eligible private sector companies that are sponsoring eligible projects. Therefore, in relation to this process, part of the commodity murabaha has been transformed from a short-term CMA to a longer-term murabaha or installment sales facility. The above steps are essentially repeated throughout the tenor of the CMA until the principal amount of the CMA has been exhausted. At the maturity of the CMA, the financial institution will pay ICD any outstanding principal balance together with the relevant profit. Next slide, please. So this is just the CMA from a flowchart perspective, just for ease of comprehension. So ICD, let's just say, for example, ICD and the underlying financial institution sign an LOF agreement for $30 million. It's for 5 years with a utilization period of 30 million. In order to disperse the facility at the start of the agreement, ICD and the financial institution also sign a commodity murabaha agreement. The tenor of the commodity murabaha agreement is 6 months, which corresponds to the utilization period of the underlying line of financing agreement. So ICD will disperse the money up front to the financial institution. The financial institution then has the funds to hand. They can use them for their own operational purposes. The financial institution, during this 6-month tenure, say 3 months in, identifies an eligible project which it believes fulfills all of ICD's eligibility criteria and would benefit from ICD's funding. ICD then makes a request, the financial institution then makes a request to ICD for partial early payment of the commodity murabaha. ICD agrees to this partial early payment. This is step number 2. The financial institution then deposits the proceeds of this early payment into an operational account owned by ICD. ICD then authorizes the financial institution to use the proceeds of this operational account to fund eligible projects. Once the maturity of the CMA has been reached, any unutilized balance as well as any outstanding profit is returned to ICD. Next slide, please. So what's the benefits of using the CMA? Well, it allows ICD to disperse the whole facility amount in advance. This will essentially enhance the liquidity position of the financial institution and can be used for general banking purposes, Sharia compliant, of course. It also offers the bank much needed flexibility. Given they have the funds at hand, they can disperse to an eligible eligible SME client with much needed flexibility. Furthermore, the turnaround time, given they have the funds at hand, is pretty quick. So this will essentially improve customer satisfaction. Furthermore, given that you have the availability of funds, the bank can plan with confidence and it basically enables the financial institution to fund eligible SME clients with minimal fuss. A conversion from the CMA to the LOF is an easy process. It's just done with the exchange of some standard documentation. It could take up to half a day. Furthermore, the terms and conditions agreed between the bank and the underlying SME client don't necessarily have to mirror the terms agreed between ICD and the financial institution. For example, the financial institution can agree a shorter tenor with the underlying client. Next slide, please. So now I'll just provide you with a brief overview of our current portfolio. So this is our current portfolio. As you can see, our current principal outstanding is approximately $400 million. The vast majority of our exposure is in the sub-Saharan African region, although we do have a 7% exposure in the Asian market, which we're hoping to expand by taking on some financial institutions from Afghanistan. In terms of average tenor, as you're aware, our LOF product offers medium-term financing, usually between the range of 3 to 5 years. So the average tenor of our current LOF portfolio is 4.2 years. Average tenor in the Asia market is slightly below that. It's about 3.67 years. In terms of average yield, the average yield on our current portfolio is currently 6.3% per annum. Current average yield in the Asia market is slightly below that. In terms of LOF financing to date, we've extended financing facilities to eligible projects worth just over $2 billion. The vast majority of our financial assistance has been in the sub-Saharan African region, as well as the European and Central Asian region. We've also extended approximately $257 million to eligible projects in the Asia region. Next slide, please. Next slide, please. Yeah, thank you. So here's just a snapshot of the developmental impact of our financing. The below figures are based on the developmental impact of our current portfolio, and they're basically the developmental impact as of financial year 2020. So in terms of employment, the LOF financing has managed to create 5,793 new full-time jobs, 1,561 of which were for females. We've also assisted 2,327 farmers. We've provided 41,200 patients to seek medical treatment. We've also enabled 1,300 students to be enrolled in different educational centers. We've funded 112 women-led or managed micro, small and medium-sized enterprises. And we've also enabled 3,231 new housing units to be financed with our LOF product. Next slide, please. So there we go. That's the LOF product in a nutshell. I would like to thank you very much for your slide. Here are my contact details. I've also included the contact information of my division head, Mr. Ulan. If you require any further information in relation to the LOF product, please don't hesitate to contact us. Both Mr. Ulan and myself will be happy to take any questions that you have during the Q&A session. Thank you very much for your time.
Thank you very much, Mr. Hakim, for your valuable presentation. Now we move forward to the Q&A session. I have received some questions from the participants. First question, I will start asking questions from Mr. Hakim. First question is that, as a Sharia compliant to combine wakala and guarantee together, as it is defined that there will be a guarantee from the bank or financial institutions for the SME's repayment. And second question to Mr. Hakim is, does ICD also provide training on Islamic finance? Mr. Hakim, the floor is with you.
Yeah, so under the wakala structure, we do normally require a guarantee from the underlying financial institution because normally we assess the financial institution and we assess the credit worthiness of the underlying financial institution. And for all intents and purposes, we take the credit risk of the financial institution. And the financial institution acts as an agent on our behalf and is responsible for identifying the underlying SME projects that it believes would benefit from ICD's financing. So thus, yes, under the Wakala structure, we normally take a guarantee from the underlying financial institution. In terms of training,
the question is that whether this is Sharia compliant or not, because as per IOP standards, it is not Sharia compliant to combine these.
All right. Yes. It's fully Sharia compliant. The agency component is basically to source the underlying SME clients. But then this agency component ends once the underlying SME client has been selected, and then there's a transition into the guarantor role. This is all reviewed by our Sharia advisor and our different Sharia committees. So I can definitely assure you that the Wakala structure, where the financial institution also acts as the guarantor, is fully Sharia compliant. In terms of offering training in Islamic finance, that will be our pleasure. Please do contact us if you require any training on any of our products and services, and we'll be happy to provide such training.
Thank you, Mr. Hakim.
Thank you.
A second question is, first question is from Mr. Wajdi, that whether full conversion is better or no, it's better to step-by-step convert to a full-fledged branch, starting from window, then full-fledged branch, then full-fledged bank. Mr. Wajdi, please.
Thank you very much. This is a good question. So there is no better. It depends of the market, of the situation. Of course, if there is a huge potential, it's better to directly convert full-fledged rather than do it by steps, because in the full-fledged you will be more equipped with more products and so. But here I want to highlight something, that Islamic window is really like kind of exception or one step before full-fledged conversion. When we usually we do it. And we encourage to do it where there is, in countries where there is no proper regulation for Islamic finance, or where the market is not very big. So basically in countries where there is the Muslim community are not the majority, or like there is like a big portion of the population are not Muslim. So usually the banks will prefer to start with Islamic windows, because this is for them, it's kind of reduced investment, let's say, because they will build on their current infrastructure, and then if the market is there, they will go for full-fledged. But when you are in country when you see there is a huge demand with the Muslim are majority, not a minority, and you are a proper regulation for that, we will we advise to do the full conversion rather than doing by steps with Islamic window and then for conversion. I want just to highlight, because we are discussing about the Islamic windows. When we do Islamic windows, we in all projects we want to be sure and you make sure that there is a proper segregation of funds between the conventional and the Islamic. If there is no segregation, we cannot say there is Islamic window.
Thank you. And the second question is, how long it will take to convert into full-fledged bank?
Yeah. Okay. There is many. Okay. There's many aspects that you take consideration. If you take it from from the initiation of the ideas till the final launching, it takes between maybe 12 to 18 months. It depends, of course. This is average, and it depends of the bank's responsiveness, the regulatory responsiveness, if there is any requirement or any approval or license needs to be granted before conversion. But if you say remove, like go to directly to the project, like from the decision to convert to the launching, it should take one year to be like in the safe side. This is include the change of the core banking system as well. I mean, the most difficult part in the conversion process is changing. If you need to change your current banking system, this will take time. The second aspect is to build your internal capabilities. The remaining aspect regarding the product development, and so ICD will help and support and provide all the required necessary effort to do it in short time. But when it comes to building capabilities, it depends on the size of the banks as well. If you have good big banks or small banks, the number of people that are needs to be trained, and so and as I mentioned, this change or replacement of your core banking system, this is a critical point as well.
Thank you, Mr. Wajdi. Last question is addressed to Dr. Salim, Yusuf Salim. Dr. Yusuf Salim, how do you see the future of Islamic banking in Afghanistan? For example, what are the specific areas to be focused on in this sector? Dr. Yusuf, are you with us? We will divert this question to Mr. Amiri. Mr. Amiri, what if you answer this question?
Yes. Yes, we see a bright future for the development of Islamic banking in Afghanistan. Afghanistan is represented 99% by Muslim population, and also the recent development globally, we are seeing that there is tremendous development we are witnessed, and also in the financial crisis, the Islamic banking have proved that they can better response. So we see there is also demand, and also the survey conducted through some of the financial institution, it shows a very high demand of the people for the Islamic banking. So Islamic banking will play a potential role also in the financial inclusion. We see that only 10% of population are they have access to banks. So one of the reason we can say fundamental reason is that we don't have outreach and services through Islamic banking throughout the country. So of course there is a very, very bright future for the Islamic banking in Afghanistan.
Thank you, Amiri Saab. I have a question, the last question from Mr. Wajdi. The question is raised by Mr. Zulfiqar Ali Khan from Afghanistan International Bank, that how much will be the fee for the conversion and all these trainings and the services that the ICD is providing? Is this is the ICD charging any fee, or is free of cost?
Thank you for the question. I think ICD, as mentioned before, is not a consultant firm; it's a development institutions. However, have been asked for the sustainability of this program to cover our cost in the project. This is our target, and this is what we usually do. So there's no proper answer. Like, I don't have answer. The fees will differ. I mean, depend on the cost, on the size of project, on the cost that should be beared by ICD, and then covered by the banks. But of course, ICD management take the decision based on many criteria, and not only on the cost, but like the country size, the bank size. Sometimes you subsidize a part of the cost, but of course there is a fees to be paid for the implementation of the project.
Thank you, Mr. Wajdi. Thank you. I will move to the closing remarks. I will introduce Dr. Salim Omaid, Chairman, Afghanistan Banks Association, to deliver the closing remarks. Your Excellency, the stage is yours, Dr. Salim.
Thank you very much, Mr. Shakir Jalali. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuhu. All the participants, our colleagues from ICD, ABA, and the Central Bank. First of all, I'm very happy that ABA hosted a wonderful seminar today on the topic conversion of conventional banks to Islamic. The topic is very important because of the need of the country and wish of the general public. Wish of the general public can be understood from the surveys, as Amiri Saab touched upon. A survey conducted in 2014 by the World Bank shows that majority of the people want Islamic banking. And in another survey conducted in 2016 by E&Y at the time of conversion of a conventional bank to Islamic, and the result shows that 80% of the population want Sharia compliant Sharia banking. So we have a case study in 2018 where a full-fledged conventional bank was converted to a full-fledged Islamic bank. And as you mentioned, not only the conversion happened, but migration from one legacy system to another legacy system also happened. So this was the best, the first example in Afghanistan, and I presume this will be the best in the world as well, that a conventional bank converted and as well as migrated at what moment of time. I think the conduct of today's seminar and the agenda, the topic which is taken up today is at the right time. I have reasons for that. I said there is a successful case study with Progress, a bank converted to Islamic banking service, and they have very good results. And we see today that there is a confident gained from the public and the Islamic banking services. The third important thing is that Yusuf Salim Saab is there. Today we have enough framework at the central bank. There are regulations, there are instructions, there are guidelines for the Islamic banking service providers. And today the ICD announcing that they are ready for playing the advisory role and the financing role. And I saw the 8-pillar approach in today's first presentation. It's a wonderful approach, and this is very much applicable in the context of Afghanistan. So I once again repeat that today's topic is taken up in a very right time. Amiri Saab also mentioned that the expansion of Islamic banking services will lead to a national priority agenda, and that is the financial inclusion. If more than 80% of the population, the general public, want the Islamic banking services, it will definitely increase and onboard them into the banking community. So I call upon all, I request the banking sector that let's say labbaik to the wish and need of the nation by providing Sharia compliant banking services. Yes, I do understand that deep consideration, time, investment, and these are required, and there are challenges as well. I have seen, again, I refer to the 8-pillar approach, which will be covered if ICD is playing the advisory role. We definitely lack the local expertise, the human capital, the investment market. We don't have sukuk as of yet. We don't have takaful, and then we require the relationship with the regional Islamic banks. The same time, my request, the other request to the Islamic banking service provider is to come up with the innovative Sharia compliant products along with the fintech solutions. we need to take the Islamic banking services to far and rural areas at the doorstep of our people, and that is only possible with the help of technology. We at the end, we at ABA very much willing and support the idea, the idea which we have discussed today, and we will definitely continue our discussions, arrangement of useful events and collaborations to make it to make it, this idea, this concept, successful in the context of Afghanistan. So let's plan to give a better tomorrow to our generation, and let's impart the experience of Islamic banking in its true spirit and soil. That is requirement. I really appreciate, at the end, I really appreciate from the core of my heart. I really thank all the people who were part of the organizing this webinar. Thank you very much to them. Thank you very much to all of you today participating in a wonderful event. And that's it. Assalamu alaikum wa rahmatullahi wa barakatuhu.
Thank you, Your Excellency. Ladies and gentlemen, with that, we bring the webinar to a close. Once again, we would like to express our heartfelt thanks to all our speakers, organizers, and participants. We will be also sharing the video recording, presentation, and short survey through mail. Thank you everyone for participating, and hope to see you soon in upcoming webinars. Thank you very much.
Thank you very much. Thank you from all the participants.
Thank you.
Thank you very much. Have a nice day.
The hospital.